Thank you, sir. I'll come back in the queue. Wishing you all the best.
Thank you so much.
Thank you. The next question is from the line of Richa Jain from Whitestone Financial Advisors. Please go ahead. We have lost the connection for the current participant, and we are moving on to the next participant. The next question is from the line of Pranav from PINC Wealth Advisors. Please go ahead.
Yeah, hello, sir. I just had a couple of questions. First would be, what would be our cash conversion cycle?
It's 41 days. For this quarter, last quarter, it was 45.
Okay, got it. And what would be our fixed asset turnover ratio?
2.5.
2.5 for this quarter?
For this quarter.
Okay. And sir, as we go forward, we are sort of this is that we have want to have a better product mix, right? We just don't want ACs to be our main component, so we should be moving to other products as well. So can we expect some margin improvement as we move from AC, or is the AC business where the margins are higher? If you could just sort of help me out there.
On margin mix, yes, the margin levels are different for different products. So currently, we see that the component business, as we grow, the margins will definitely improve. And at the same time, the newer segments which we are entering into, again, the idea is same, that we want to capitalize on the margin improvement side. So yes, this is why we are looking at optimizing our product mix and rather improving the overall utilization of the manufacturing capabilities.
And at the current capacity, sir, could you just give a rough outlook as what would be our current utilization?
Because of AC, the seasonal capacity utilization, like for Q1, it would be almost close to 95% plus for the AC business. But having said that, Q2 and Q3 is the two quarters where the capacity utilization especially dropped significantly, and hence our efforts to introduce these products, the small domestic appliances and the larger appliances like washing machines and all what we're talking about. So that effort in the direction to improve the capacity utilization especially during Q2 and Q3. So the entire effort is to actually improve the utilization in Q2 and Q3.
Q2 and Q3. And we have an order book for these items?
Yes. So the order book is extremely healthy, and this is why we have shared the numbers for the entire year at almost 45% growth.
Got it, sir. Thank you so much, and best of luck.
Thank you, Pranav.
Thank you. The next question is from the line of Hiten Boricha from Sequent Investments. Please go ahead.
Good morning, sir. So my question is on the PLI benefits. Can you throw what was the PLI benefits in current quarter? And maybe also what are we expecting in this full year?
Okay. Yeah. So Hiten, for the financial year 24-25, the total outlay for the expected PLI incentive is going to be 37.5 crores, out of which 14.5 crores is something which has been accrued in Q1 itself, and the balance will be accrued in the subsequent 3 quarters.
So this 14.5 is indicated in sales itself, right, sir?
On the ratio of it. Yeah, on the ratio of the sales, yeah.
Sorry, you were not audible.
Yeah, so it is proportionate to the sales revenue.
Okay. And my second question is on the debt, sir. As you mentioned, finance cost has gone up in terms of sales. So we are expecting, assuming the sales will come down in Q2 and Q3 because of weak quarter, so our finance cost will also come down. So what will be our finance cost for FY25?
So the finance cost in value terms is going to reduce in Q2 and Q3, but as a percentage of sales, if you look at it, is more or less a standard. So as percentage of sales, there is no increase in the finance cost.
So if you can give Sorry?
Sir, please come again. It will be around 40 to 45 crore around for the full year basis. Because in the first quarter, the sales has been around, you see, around 750 crore. This is why you are seeing that the finance cost has gone up in the current quarter. As you have mentioned rightly, in the current second and third quarter, there will be a lower sale as per the business, and the finance cost will definitely come down
because the amount of bill discounting gets reduced during the second quarter and the third quarter. Hence, the finance cost will also come down.
Okay. Yeah. And so my final question is on the gross block. So what is our current gross block after the commercialization of Sri City?
It is roughly around 800 crores of gross block as on June.
As on June. And we can do an asset TO of around 2.5x on this, right?
Yes.
Okay, understood. That's all from my side, sir. Thank you.
Thank you, team.
Thank you. The next question is from the line of Secha Jain from Whitestone Financial Advisors. Please go ahead.
Hi, sir. Am I audible?
Ma'am, may I request you to please use your handset?
Yeah. Hi, sir. Am I audible now?
Yes, ma'am.
Yeah.
Okay. So most of my questions have been asked. I just have few questions. I just wanted to know the Sri City plant, it's right now at 45% capacity. So what kind of revenue can we expect from this plant at a full capacity? And what kind of capex have we done for this plant, sir?
Yeah. So Sri City, we have created a capacity of almost 1.2 million units. So it is roughly 6 lakhs of outdoor units and 6 lakhs of indoor units. That's the capacity we created in Sri City, which can roughly give a revenue or a top line of 600 to 700 crores with the current capex.
Okay.
Plus,
And
now that we are adding washing machine and other products to it and the component business, so we can gradually ramp it up to maybe 1,000 odd crores in next 2 years.
Okay. And so would you be able to give, some order book number? Would you be able to quantify the order book in the AC and non-AC?
Ms. Jain, let's put it this way, that the year-end number we are looking at is almost 45 to 50% growth. So which means with 750 already achieved, we are looking at close to anywhere between 100 plus minus 50 odd crores of revenue in the entire year. So
Right.
Yeah.
Okay. So any new capex that we are planning for this year?
So, as per our annual business plan, we are not looking at any significant investments except for the washing machine lines which we are putting up in some bit of investments. So our approved budget for capex this year is approximately 50 to 60 odd crores.
Okay. And so just one last question. This 45% growth in revenue that you're guiding for, this would be on an overall basis, right? Not just the AC, right?
Yeah, this is overall basis and all organic growth we are talking about. So we are not considering any inorganic growth here.
Okay. Fair enough, sir. So thank you, sir. Thank you so much.
Thank you, Ms. Jain.
Thank you. The next question is from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity. I wanted to know about your gross margins. For the current quarter, they seem to be around 14%, whereas last quarter was 18%. So, if you can throw a little bit light on it. And you also mentioned that sales includes incentives. So without incentives, probably the margins are even lower. So.
Yeah, Tushar, thank you. So I think we already answered this question. Yes, if we are comparing it to Q4, our margins were 18 odd % compared to 14% this quarter. But on a Q1, Y-on-Y basis, Q1 last year was also similar at 14 odd %. Yeah. So there's not been a dip, but yes, at the same time, there is an impact of commodities, like I said. So there's almost a 2.5% impact of commodities itself, since especially copper zoomed in May, June. So that is something which has impacted our margins for the previous last quarter. And as per our agreed pricing method with our customers, this gets passed on in the next quarter. So we will see the margins for the Q2 and Q3 getting improved basically because of this.
And so for the full year, what should one model the margins and gross margins?
So on a full year basis, we are looking at maintaining a similar margin as FY24.
Okay, so 16%.
15% plus minus maybe 0.5 is something what was achieved last year, and we're looking to maintain similar kind of margins.
Thank you. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Vedant Sarda, who is an individual investor. Please go ahead.
Yeah, hello.
Yes.
Yeah.
Yeah. So what would be the split for the FY25 and FY26 for H1 and H2?
26. Okay. Typically, so this is, I can basically talk historically, H1 and H2 is almost equal. So it is maybe like, it is almost equal. H1 and H2 are almost equal historically. So there is no significant gap between revenues in H1 and H2.
Okay. And yeah, yes.
So H2 is actually comparatively slightly is comparatively better. So I'll answer it this way: H1 would be 45%, H2 would be 55%. This is what has been historically.
Okay. Thank you. All the best for your next quarter.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Pranay Roop Chatterjee from Burman Capital. Please go ahead.
Thanks. Am I audible?
Yeah.
Great. I have only one question. Sir, so this time in summer, so I am a resident of Delhi, and at least for me, the heat wave this time was sort of unprecedented, right? What that would also mean is that in a normal base case scenario, we would not expect that to happen every year. Right now, industry is increased by 40-50%, I think, in the summer season this year. Everyone has reported blockbuster growth. And what has also happened is the insourcing already started before that. So brands have started setting up the capacity, and probably some are still left to, ramp it up. And then the contract manufacturers have also expanded their capacity, especially because of the shortage seen in inventory and production this season, right? Now, I'm just trying to think, how does the thought process happen? Because this is a call between a short-term potential oversupply situation next year versus a long-term strategic call to have the capacity in place, right? So because next year one would expect that probably the industry would not have any growth or maybe a slight growth of this high base, right? Because a lot of first-time buyers already have put in ACs in their homes. So how do you think about, do you see a oversupply situation next year? Because everyone has come up with capacity as a sort of a knee-jerk reaction, right? So how do you see this? I may be completely wrong, but I just wanted to hear your thoughts.
Okay. Yeah. So Mr. Chatterjee, yes, this year we have seen significant growth across brands and across all OEMs and ODMs, attributing to the heat wave. Yes. So this is why we are saying that this 25% growth is something unprecedented, and we'll be happy if this repeats, but then we at the same time don't expect a similar 25% growth for the next year. You are right in that, to that extent, but at a nominal growth of 12 to 15% year on year, not just because of the heat wave, but because of the increased buying powers, because the current penetration levels are very low in India. So our potential to grow here is not because of the heat wave or just this. At a global average of 42% penetration, India is just at 8%, which means we have a long way to go. So, on a long-term basis, if we see, the market is going to double every 4 to 5 years. And there has been a very detailed report presented by BCG and other reputed consultants to the Government of India, to the Industry Association at all levels. So, based on the projections given by the government itself, the market is looking from current 10 million to become almost 24 million by FY28-29, and additional exports, the market is the India potential looks to around 40 million by 28-29. So that is the kind of potential the market is talking about and looking at, and hence there is no excess capacity. Let's put it this way: the same fear which was given last year, that is there an excess capacity in the market, has come flat now, and people see that there is a shortfall of capacity. So we see that this. The growth for AC especially will continue over the next 8 to 10 years definitely, because we are really sitting in a very low penetration level.
Got it, sir. Thanks a lot. All the best. That's it.
Thank you so much.
Thank you. The next question is from the line of Shraddha Kapadia from Share India. Please go ahead.
Hello, am I audible?
Yes, ma'am, you're audible.
Okay, so I just had one question. So, like you said, only washing machine is yet to start, or are there any other products also which are yet to start? And what would be the full potential which we can expect for the upcoming products to contribute to our revenue?
So, Shraddha, we are continuously expanding our product portfolio both for larger appliances as well as small domestic appliances. So for the larger appliances, washing machine is something which is now the development is complete and we are looking to launch in Q3. Similarly, for small domestic appliances, a set of products like air fryers, hair dryers and others have been developed and which we are looking at to launch this year. So it is a continuous process. Again, next year we are evaluating certain products to develop for next year. So that's a continuous exercise, and this is why we have a high focus on our R&D capabilities, and we are continuously expanding our R&D team. So this is a continuous exercise, and our journey would continue to introduce newer products to the market every year, whereby we can utilize our current capabilities and our manufacturing capacities.
Right. Okay. Thank you so much.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to the management for closing comments.
Thank you all for participating in the earnings call today. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR managers at Valorem Advisors. Thank you so much.
On behalf of JM Financials, that concludes this conference. Thank you for joining us, and you may now disconnect your line.